Welcome, Andrew.
Thank you, Ori. It's great to be here.
Do you have any loan products, for example, if somebody wants to buy a house that's a tear down and there's a land under it and they want to build on it?
It's hard to buy the house and then tear it down because then you're breaching your contract with the original lender. It's a fine line to walk. You have to almost set it up the right way at the beginning, or you have to talk with your lender
And disclose.
make sure you're not in breach of your mortgage agreement.
Very good point.
But there are construction loans out there, and we can do them. So they'll give you scheduled draws at the beginning, and then at the end they give you a final 30-year fixed loan.
If the house you want to buy doesn't appraise, what are your options?
Well, that's where you come in, and you have to go back and renegotiate. But in the event that you can't renegotiate, you come to a spot where you have to make some decisions. If you're going to stay and buy the house, you're going to have to pay the difference between the lower value and what the actual appraised value is.
Does that happen often in today's market?
I mean, I haven't seen it happen a lot lately, and most of the time sellers seem to be willing to adjust the price, because if that's what the appraised value is, that's the value of the property. Now, we have had opportunities for the agents to do what's called a rebuttal. They can send in comparables on why they think the property is valued where they maybe listed it at, and they can send that into the appraiser, or we can send it to the appraiser, and then they will look at it and reevaluate. Be honest, a lot of times they don't make adjustments. Appraisers are proud people, and they feel their work was done right. But there are instances where we have seen rebuttals work, and if they can adjust the value, then we'll go off the value that we get. But at the end of the day, the value is what the appraised value comes in at.
Andrew, what about closing costs? What are really buyers are looking at when buying a home?
Closing costs vary as the loan amount goes up. So you can't really have just a set X% of the purchase price, because as your loan gets bigger, the percentage gets smaller. So if you have a small loan, the closing costs can tend to be a much higher percent. In general, we charge an underwriting fee, a processing fee, a doc prep fee. They total about $2,000. Beyond that, you have some taxes from the state. You have costs that are going to be charged by the title company. So those are pretty much what you're working with when it comes to closing costs. And then you have your prepaids, which is your prepaid interest, your property taxes, and your homeowner's insurance. So those together add up to be your closing costs.
So how much do you need to put in escrow for prepaid, generally speaking?
Taxes, it depends on the time of year that you're closing. Taxes in Florida are paid in November. So they'll have a formula on how many months they need to collect for taxes just based on the month that you're closing. For insurances, you're going to pay a full year of insurance up front, and then you're going to have an additional 3 months collected in your escrow account. And then the prepaid interest is just depends on what day you're closing and how many days there are left in the month, and that's how they determine prepaid interest.
So I think that's the scariest part of the closing disclosure, when you get all this and you're like, I didn't realize I had to pay a year in advance insurance plus this, and that's what the buyers truly get overwhelmed by, without realizing that these are just your...
Well, if you really think about it logically, if you got into a house and you only paid 1 month of insurance and then there was a hurricane, then the insurance company's not covered. So they make you pay a policy in full, so you have coverage on your property. And that 3 months that they're collecting is really that little cushion to start building the escrow account. So I think with good communication at the beginning, explaining that you're going to have to pay insurance, it kind of makes sense. So it's just having good communication during the transaction.
And does it make sense for a Florida property owner to refinance and cash out?
Well, there's two different types of refinances. You have a straight rate and term, and then you have a cash out refinance. So a cash out refinance can make sense anytime. I did a refinance recently for somebody that had a lower interest rate, but she was looking to put a pool on her property. She had a bunch of credit card debt. After we did the refinance, she paid off $1,000 in monthly expenses for the credit cards, and she got the $80,000 to her pool, and her mortgage only went up by $700. So even though we went from a lower rate to a higher rate, still doing all of those things and getting rid of the debt, it made sense. On a rate and term, it's a little bit more tricky. We need to see what the rate is, how much we can reduce their payment by getting a lower interest rate. So that's more of on a case-by-case basis. I've seen loans where I've lowered them a half a point on a big loan and it worked. I've seen where it doesn't make sense unless I lower it by 2%. So really it's investigating, running the numbers, and figuring out what works.
So Andrew, we have a listing that we tried to break record with, but it's been on the market for a while. We're looking at price reduction. Are there any other options for the sellers besides the price reduction to attract buyers?
Yeah, absolutely. One of our most popular products right now is the temporary buy down. You can do it for 1 year, 2 years, or 3 years. The more years, the more expensive it gets. Essentially what this is it's a seller concession. The seller can, in lieu of doing a price reduction, they can offer an incentive to get interest rates, let's just say on the 2-1 buy down, you can have interest rates 2% lower than what the actual rate is. These funds go to the lender and they're used to pay the difference between what your actual note rate is. So let's just say your note rate was 6 3/4. So in year 1, you would be paying essentially 4.75, 2% lower. The difference is being paid at the lender out of your escrow account. So they'll pay the difference between 6.75 and 4.75 in year 1. In year 2, they pay the difference between 6.75 and 5.75. And then in year 3 through 30, those funds will have been exhausted and you will pay your note rate of 6.75 for the rest of your term, unless you have an opportunity to refinance, which hopefully rates do their part and we have those opportunities in the near future.
So Andrew, we're now at a point where a lot of buyers say it's cheaper to rent. Why should I buy?
Well, I mean, home ownership is the fastest way to building wealth. Now, there's plenty of people that will buy a home, they'll live in it for a little while, and then they'll move to another one, and they're just trying to build their real estate portfolio. You can't do that with renting, and if you're renting, you're pretty much paying somebody else's mortgage. You're not building any equity. So if you want to try and build wealth, you have to do it by using real estate.
A lot of times I have buyers that say, I've been banking with Wells Fargo or Citibank or Chase over 10 years. This is the bank I will go with. Why should they go to a lender or mortgage broker versus a big bank?
Well, banks tend to operate in a very small box. We tend to look at things a little bit differently and try and figure out where to go with a specific file. You may go to Bank of America or Wells Fargo and they may look at your scenario and say it doesn't fit into our box. I have lots of different products. So if it doesn't work for product A, I can look at B, C, D, and on down the line. Big bank, they're not going to look at alternate programs, bank statement loans, 1099 only, things that self-employed borrowers need. They're going to look for conventional, FHA, VA, and jumbo products, and that's it. They don't step outside the box. It's like doing a puzzle, especially if somebody is a little more challenging, then we get to get a little creative, put our thinking hats on, and try and figure out how to get somebody financing. Another great thing, obviously, is availability. Banks work 9 to 5, they're not available on the weekends. So if you're out showing somebody a property, you need a pre-approval letter, or you need your client to run numbers to make sure it works for them, you know that you can always reach me on the weekends.
So it's more a white glove service.
7 days a week, real estate don't sleep.
Before 9, after 5.
That's right.
If somebody has more questions about financing, how can they find you?
Oh, well, absolutely. They can reach out to me. I'll have my contacts in the description below, so reach out, happy to help.
Thank you so much for your time, Andy, today. And I told you, he knows his stuff when it comes to mortgages.
Thanks, Ori. It was a pleasure being here.